Well, let's bring in David Livingston to get some expert analysis of the G7 environment meeting. He's an associate fellow of the Energy and Climate Program at the Carnegie Endowment. Welcome to the show.
Thanks, Rachelle.
So, David, how well does the G7 work without the US in achieving its goals?
Well, the G7 is certainly not what it used to be. In 1980, we should remember the G7 used to account for 60% of global GDP and over 70% of global greenhouse gas emissions. Today, that number is about 45% of global GDP and less than 25% of global greenhouse gas emissions. Now, there are still some areas where it can make progress. It should be noted that the U.S. probably hoped to really hold things up by refusing to make progress on climate in this round of G7 environment ministers' talks. But it was reduced to simply resorting to being a footnote at the bottom of the leaders' declaration, where it just simply said that the U.S. agrees with everything except for any provision relating to climate change and fiscal transfers related to climate finance.
So then if you're one of these countries that are really the most vulnerable to climate change and you're seeing what's happening with the G7 meetings, what can the G7 then take to some of these countries?
The G7 will continue to make progress. And here's actually, I cited those numbers showing the decreasing relevance or economic and climate weight of the G7. But one area in which it really still matters is it still has the global financial capitals that manage the vast majority of global financial assets. So, for example, in this G7 declaration, we saw some very important statements coming out regarding green finance and the greening of the global financial system. This is something that the UN Environment Program, with their financial inquiry into the design of a sustainable financial system, has been making great headway into, and it was refreshing to see that. Now, interestingly, this is actually an area where industrialized countries have been lagging a little bit behind some developing countries. China, for example, has a 35-point plan for greening its financial system, and it plays an outsized role in the nearly $100 billion green bond market that exists today.
So then to that point then, what does the US pulling out mean for China's role in the whole global climate change attempt?
Well, that's really the million-dollar question, and that's probably the great story of the next few decades when it comes to climate change, is how will China respond? I would say it breaks down really into two different components. On the one hand, you may see China ramping up its ambitions in a few years once it feels that it's made the most of its diplomatic opportunities that's been handed by what could only be called a U.S. own goal in announcing its withdrawal from the Paris Climate Agreement. Secondly, though, on the diplomatic angle, it's very interesting to note that at the Clean Energy Ministerial, which just took place in China this past week, Xi Jinping met not with the Energy Secretary of the United States, but instead with the Governor of California, Jerry Brown, who's been stepping up efforts at establishing interesting diplomatic relations between a state, California, and a country in China.
So how, in terms of the silver linings and some of the opportunities then that we've seen presented by the US taking this stance, how have we seen other people really step up to perhaps try and fill that void?
Well, I think you're going to, once again, to come back to China, you're going to see China working with other actors in the global south, as well as with other climate change leaders, such as the European Union, to really advance the ball on climate change in the absence of U.S. leadership. I would expect, for example, when it comes to climate finance, for increasing climate finance flows to come through China's new vintage of development finance institutions, from the South-South Cooperation Fund to the Asian Infrastructure and Investment Bank, to the new development bank set up by the BRICS countries. You're going to see more and more climate finance going in a South-South direction, or going through institutions in which China has either direct control or an outsized influence in. This means that there are repercussions not only for climate change and the way that we distribute money from wealthier countries or from even powerful developing countries to the least powerful, but it will also reshape the contours of the global economic and financial system in the process.
And even as we look at the competitiveness of the global energy industry, you have the US taking this one stance, US companies saying, no, we're still going to meet the goals of the Accord. But then you also have a new coal plant just recently opening in Pennsylvania that President Trump is really lauding and championing. What does all this do then for US competitiveness on the energy front?
Well, the key fact is that though there will be some coal jobs related mostly to the export of coal to the developing world, it's very unlikely that we're going to see anything more than a handful, if that, of new coal power plants built in the United States. No private investor in their right mind wants to finance them when all the market indicators are moving in the opposite direction. So on the one hand, you've got $73 trillion worth of assets under management that are right now being managed by investors that have committed to sustainability principles. And for the U.S. to run away from that, it doesn't seem to be skating to the areas where the markets are growing fastest and where the opportunities for American citizens and businesses are going to be at into the 2020s and 2030s. What can we do? Well, let's hope that the administration is genuine in its commitment to pursue climate mitigation and pursue clean energy opportunities, even outside of the Paris Agreement. The solar market, jobs in the solar market grew 25% last year. That's far faster than the declines we're seeing in the coal sector. And so if the administration just steps back from the political rhetoric for a second and looks hard at the numbers with a business eye, I'm sure that they'll see the opportunities are there in the clean energy sector.
That's certainly a very big if, but thank you for your insights, David Livingston, Associate Fellow at the Energy and Climate Program at the Carnegie Endowment.